Why don't you take us back, if you could, to when you first got the call from Sam and you first had a chance to look at the books, because I think a lot of people are still trying to understand exactly what happened here. How much of this was about commingling? How much of this was about terrible marking of the books? What did you see?
Yeah, I think I got the call from Sam 24, 48 hours after I made the tweet, and then he wanted to talk. So at the beginning, I thought he would just wanted to, do a buyout on, do an OTC deal to buy out the FTT tokens we had. And then he wanted actually a buyout of the entire firm, of the entire FTX platform. And then, but then we got our team on it. It was pretty clear pretty soon that there's, there's misappropriation of user funds. The user funds are gone. At that point, it's clearly that he lied to his users, his investors, his VC investors, his employees. At that point, I thought I couldn't, whatever data that's in the data room, we couldn't trust anymore. So it was quite hard for us to do that due diligence. So we didn't go very far.
We've all seen his tweets now overnight. Do you think he understood what he was doing?
I think he thought he understood. I think he probably still thinks he understands what he's doing now, which I don't think he should be tweeting.
That's for sure. But in terms of intent, I mean, one of the things that's going to be looked at, I'm sure, by regulators, potentially by prosecutors, is what he intended to do. He seems to suggest in a lot of these tweets that he didn't understand, or he mismarked things. And when I say mismarked, mislabeled things is what I think is the phrase that he's used. And yet, when you looked under the books, clearly it appears that he was demonstrably commingling funds, using the funds to leverage himself up and the like.
Yeah, I think, look, I didn't do the due diligence myself, but I think it will be very, very clear that Sam knows that he was using the user funds to do trading for Alameda, and he has been probably doing this for quite a while that nobody else knew until very recently. Well, a small number of people in FTX probably knew, but most of the other normal employees probably did not know. I think that's probably the most likely situation.
One of the things that I think this has demonstrated to the public about crypto is just how leveraged the business is, how so many of these coins, that FTT token and other tokens have been used to leverage other tokens. How concerned are you about that? And how much leverage is in the Binance system, if you will?
Sure. So I think we are very concerned about anybody using the token they create for leverage, as a collateral. At Binance, we don't do that. We don't use BNB as collateral for anything we do. So it's very simple. Yeah.
But when you think about the health of the quote unquote balance sheet of so many of these firms in the crypto space, in the ecosystem, how much of those balance sheets do you think are actual fiat currency that has some stability versus some kind of token or other kind of cryptocurrency that may or may not actually have the value that it pretends to have, in part because the float of some of these tokens is so low that it appears the other piece of it is that some people are almost artificially inflating the valuations of these things.
Yeah, so I think there's a couple of things here. There's the user assets. You should just, every exchange should just hold the user assets as is, as chosen by the users, whatever assets they want to allocate to. There's the operational funds for the business itself. That should be in a combination of cryptocurrencies, stable coins, and maybe even some fiat currencies. Every different business can allocate that differently, depending on their risk appetite and the business model. Binance has always been profitable, so even today we're profitable, we're sustainable. But our rough allocation is about a third in stable coins and then a third in some of the larger coins, and also we keep the BNB coin that we hold very separately in our accounting, and this has been in our financial reports even from very early days. So we always keep the BNB separate in terms of accounting for the cash flows we have. We do believe that many other platforms may include this as their cash reserves, which is and when they present to potential investors, etc., that may be somewhat risky or misleading. So we don't do that. We have records of our financial statements from very early days. We have always kept BNB separate.
Zhao, also known as CZ, was speaking at a conference in Abu Dhabi where he officially announced the creation of an industry-wide recovery fund to help the industry through the most recent crisis. Okay, let's talk about the top stories. First up, the crypto lending arm of Genesis just halted withdrawals in the latest sign of contagion for the industry. Genesis Global Capital reported more than $2.8 billion in active loans by the end of its third quarter, and now the company is halting new loans and redemptions, citing the turmoil at FTX. In a statement on Twitter, Genesis said, quote, "We recognize how challenging this past week has been due to the impact of the FTX news. At Genesis, we are entirely focused on doing everything we can to serve our clients and navigate this difficult market environment." Now, according to CoinDesk, the company's interim CEO said Genesis Trading, which is the broker-dealer arm of the business, is capitalized and operated independently from the lending unit. Next, Kyle Davies, the co-founder behind defunct crypto hedge fund Three Arrows Capital, is also speaking out in the wake of crypto's latest crisis, and he's partly blaming Sam Bankman-Fried for 3AC's collapse. In an interview with CNBC this morning, Davies claimed FTX hunted 3AC's positions.
If you recall, one of the biggest critics of us right after our collapse was Sam Bankman-Fried himself of FTX. And we now know, as things are coming out, that he was probably covering up a lot of things on his side. And it's also coming out that he hunted our positions. So I think it's one of those things that in the trueness of time, we'll find out the truth, and we're looking forward to justice.
Davies also addressed the hedge fund's bankruptcy proceedings and allegations that he's in hiding to avoid law enforcement.
Well, you have to understand that we're a trading firm, right? So first of all, we're paid to take risk, but for two, we take all kinds of risk. We take gross lever, we take spread risk, we take gross, we take directional risk. And after the Luna collapse, everything just unfolded extremely quickly. Every major position that we had went against us. All spreads, all discounted trades, all directional trades, everything. And that was in part because everyone had on similar positions, but also in part because there was a credit squeeze and everyone had to unwind at the same time. So there's a lot of pain going through the crypto industry.
Last, House lawmakers are calling on SBF to testify in a hearing surrounding what went wrong with FTX. A bipartisan group of House Financial Services Committee members will hold a hearing in December where they plan to grill executives from the crypto exchange, along with Alameda Research, Binance, and others. In a statement, Representative Maxine Waters said, quote, "The fall of FTX has posed tremendous harm to over 1 million users, many of whom were everyday people who invested their hard-earned savings into the FTX cryptocurrency exchange, only to watch it all disappear within a matter of seconds." Unfortunately, this event is just one out of many examples of cryptocurrency platforms that have collapsed just this past year. All right, on to our main story. It has been a wild ride for the crypto industry since FTX confirmed its liquidity crisis last week, with new details emerging every day. So Crypto World took a moment to break down just how FTX's collapse happened, including its ties to Terra's collapse back in May.
The demise of algorithmic stablecoin Terra and its sister token Luna in May of 2022 wreaked havoc on the crypto industry.
Check out this stablecoin. Terra's Luna breaking its one-to-one peg to the dollar, plunging to as low as 26 cents this morning.
What's happening with Terra USD? How is it not a black eye for the entire industry?
It's one of the worst scandals in the history of the crypto industry.
Digital currency prices were decimated, and several businesses were forced to declare bankruptcy as their investments in the failed projects came back to haunt them. But amidst the drama of those days and weeks after Terra's collapse, Sam Bankman-Fried, who founded trading firm Alameda Research in 2017 and crypto exchange FTX in 2019, quickly rose as the savior of the industry. SBF, as he's also known, and his companies poured billions of dollars of liquidity into the space, bailing out businesses like BlockFi and Voyager Digital. As recently as August, SBF told CNBC that FTX had $1 billion in cash to deploy at any given moment.
It's not going to be good for anyone long term if we have real pain, if we have like real blowouts, and it's not fair to customers, and it's not going to be good for regulation. It's not going to be good for anything. From a longer term perspective, it's just that was what was important for the ecosystem, is what was important for customers, and it was what was important for people to be able to operate in the ecosystem without being terrified that unknown unknowns were going to blow them up somehow.
It seemed like SBF had become the white knight of crypto, the lender of last resort for an entire industry.